Devalkar is head of equity at Axis Mutual Fund. He's joining us now. Shreyas, good to have you with us here. Good morning. Thanks for your time. So as we wrap up 24, let's talk about 25 and beyond, Shreyas. What are the top sort of micro themes? And I'm not talking about the big conventional sectors where these are slow-moving giants, but we're not talking about, we don't want slow-moving giants. We're all used to fast-moving cheetahs. So what are the micro themes really, Shreyas, that one should focus on, which can play out? And I mean, I'm not talking about you to talk about specific stocks, but themes and areas. Yeah.
So when you say slow moving and fast moving, the point is that yes, the giants also have pockets of fast moving. But let's start with the fast moving smaller companies. The sectors which are doing well, probably, and it may continue to do well. One is especially the renewable power sector. Renewable power sector, also the growth in that is also leading to further growth in the transmission and distribution. So this space, in my opinion, is a long-term story for India and worldwide. It is expected to continue. Second big thing is electronic manufacturing services in India. That trade has started, and there is a lot of progression. Multiple companies are entering into it. And again, as you highlighted, there are not many big companies, especially the listed space. In some of them, maybe the unlisted space. But in the listed space, especially, there are smaller and mid-sized companies. So this space definitely there are multiple policy actions being taken. Both by way of PLIs to import duties, etc. So, in my opinion, this space will import substitution theme, which can be played through electronic manufacturing services, is definitely the one second big thing. A third one, which is about government spending. So in the first half, generally, we have seen that the government spend has been less, and anything associated with that slower spend, which got impacted in the first half. In my opinion, some of the reversal is already seen on the ground. So if you see defense sector, already some of the orders were announced recently, and this is just one of the government spend. But the government spend definitely is going to benefit, especially to the sectors like defense. So in my opinion, these are the areas of particularly mid and small cap. Apart from this, there are certain changes in the marketplace which are happening. One is the clear-cut shift towards quick commerce. It is having its repercussion not only to the quick commerce companies, but to FMCG and all other traditional businesses as well. So one need to really find out the winner loser in this. And that's where one big shift which is happening in the entire consumption basket, which touches right from the FMCG to the retail sector. And then obviously the quick commerce companies and the delivery companies. So this entire pack, you are seeing the upheaval in this, and the different winners and losers coming out, though there are some of them are in the large cap. But yes, this is where one need to focus on. And one more angle is about EV. Definitely, there are multiple thoughts around it. What are the right price points for EV in India? Whether it is always remain sub 15 lakh car segment, or in case of two-wheeler, whether it will always remain sub or 70-80,000 scooter segment. I think we are going to see some different trends emerging in this EV space as well, wherein the acceptability need to be checked at a mass market level, with quite a few launches happening from both domestic and international companies in this space. So that is the third in the large cap space, especially. This is what one should watch out for. And coming back to your the traditional companies that are large and not growing, and I'm sure the financial services is one of them. There has been certain unintended impact of credit tightening on the credit growth as well, as such so far. And there are certain elements of credit cost also, elevated credit cost. So the reversal of that we need to be watching out for 2025. The way I said that in case of capex, definitely the second half maybe faster than first half of the financial year. Similarly, in case of the credit growth, which is slowing down for multiple reasons, any revival on that because of fiscal spend, because of rate cuts, and so on, which one should look forward to in next calendar year.
Shreyas, hi. Thank you for joining in. This is Reema here. Now, you own a fair amount of large cap IT in your portfolio. The likes of TCS, Infosys, make their way to the top 10 holdings of your blue chip fund. What have you picked up in terms of what we could hear from the companies, say, over the next 2 quarters? Everyone's watching for the pace of the recovery after 2 tough years. Your expectation from the numbers of these companies, just say for Q3, Q4.
IT as a sector actually is more of a portfolio call. So if you notice that, yes, whether the growth rate for IT is in that mid-single digit. So, and probably IT is the only sector where market get excited by just 1 or 2% beat on the growth numbers, unlike any other sector where we need a lot more beat for the stocks to react sharply. So IT, probably that growth rate of mid-single digit, which is what some of them are reporting. Some of them are reporting even lower than that, and some of them are slightly higher than that. So in this space, what we are looking forward to is one, this pack has been one of the relatively less expensive by the traditional metric of valuation, which is free cash flow and the market cap to free cash flows generation. So free cash flow yield, dividend yield, etc. So in that context, as I said, this is more of a portfolio call for us. As far as growth is concerned, definitely the growth has the growth decelerated right from the Ukraine war 2022 or, and that deceleration and the earning cuts has stopped broadly by beginning of this year. Actually, the earning cuts stopped for this sector, and that's where if you notice that though there are not many upgrades, but just because the earning cuts have stopped, this sector has given us good return in this calendar year. When it comes to the future, in my opinion, the growth rates, as I said, that yes, there may be 1 or 2% upgrades or so, and we need to really watch out for what would be the commentary, and based on that, we should make our judgment in this next 2 quarters. Generally, as usual, again, seasonality-wise, as you know, that December quarter is always a weaker quarter, and as far as QOQ growth is concerned, traditionally, and then on that day, generally the Q4 is relatively better quarter. So that's what has been traditionally case in case of IT sector. It's the deal wins which market will look forward to, because as I said, the absolute growth is not really exciting, especially in the large caps compared to some of the mid and small. So deal wins and the commentary around that, what there has been certain expectations around whether with Trump coming in, whether there are going to be changes in the spend pattern in the US, whether there will be changes in the interest rate progression in the US. It may have its impact on the financial services sector in US. Further, any acceleration in making US may further give fillip to manufacturing sector. Again, that can have some impact. So we are watching out for multiple things in this. So taking comfort from the traditional valuation metrics to any trigger which may emerge, both because of macro like the interest rate, as well as certain on-ground changes which may happen in US because of the policy changes.
That was very well put, and we look forward to more conversations in 25 unless we speak again this year. Shreyas, thank you very much for joining us. Appreciate your time here on CNBC TV 18, and it's always a pleasure.